Welcome to Tax Tip Tuesday. Today we're going to cover one of the most common questions I get this time of year. Receipts. What the heck do I do with them? Am I required to keep them? What format? Will the IRS ever ask for them? So you are required to keep receipts. The IRS says keep receipts for 3 years. Once you get past 3 years, you're probably okay to get rid of them. And actually the same thing goes for most tax returns. You're not required to keep copies of tax returns for 7 years or 10 years any longer. Most everything now is 3 years. If you want to be super conservative, keep it for 5. But for receipts, 3 years, you can get rid of those things. Most IRS audits we see take place in about 18 to 24 months after filing. And the statute for most audits is 3 years. So if you've gone past 3 years of the filing return or filing date, then you're probably clear of the audit window. If they did audit you prior to that 3-year mark and find an error or find something, then they can extend that to 6 years, but we hardly ever see it get extended or see it get extended anything past 6 years. So for receipts on the business side, on the home side, on the tax return side, keep those things for 3 years. After that, trash them, shred them, get rid of them. You still need to keep them. Bank statements are not enough. Credit card statements are not enough. The IRS still wants to see receipts. Obviously, receipts fade. You lose some of them. So if you've kept most of your receipts, I say 80% of your receipts, you're probably in good shape and better than most. But they do want to see these things in most cases. For example, if you own a business and you buy $80 worth of fuel at the gas station, they want to see a receipt to make sure you bought $80 worth of gas, not $80 worth of beer or something, candy bars. So that's why they do still want to see some receipts, even though they know you have bank statements and receipts aren't the greatest thing in the world. Format, how do you keep these things? It's up to you, really. You can throw them in a shoebox. You can file them, you can scan them, you can save them in QuickBooks or an accounting app, take pictures on your phone, really digital, in person, however you want to handle these things from a filing system. As long as you keep them, that's all that really matters. And the odds of an IRS agent asking for them or needing them are really, really small. But if they did, you would need to provide those things. You could dump them all out on the desk, or you can have them all neatly organized. Just kind of depends on how you kept up with your records. But having it within 3 years is the most important thing. If you don't have your receipts, you've lost them all and you get audited, you can attempt to go through it with bank statements or credit card statements and notes, but it kind of depends on the auditor on whether they'll accept those kind of items or not. So keep them for 3 years, keep tax returns for 3 years. Anything older than that, you can start to get rid of. We got some clients that have tax returns and receipts going back to the 70s, which is wild. You don't have to do that. You can shred all those things. You can get rid of them and clean up some space. Most everything we recommend now is on a digital format, save it in a cloud. We have a tax portal for our clients. You save stuff in there. You've got access to it. You don't have to worry about losing it or it fading. I know for me, what I like to do, I keep one of those accordion file folders in my vehicle. That's where I spend most of my money for business. It's when I'm riding around or doing stuff. So when I spend money, when I use my business card, I take the receipt, I stick it in that accordion file folder in my car. And at the end of the week, I pull them all out and I throw them in a file folder and I file them back and label them by week. So I know I've got them if I've ever got to go back and access them. I hope this helps you. Have an awesome Tuesday and I'll see you all next week. Thanks.